Yeah, let's talk about some characteristic of financial statement. As I said, this report should be prepared formally and structured. So we are expecting at least this report to bear some characteristic, and one of them it should be understandability. That the information must be easily understandable to the users. So when you're preparing financial statement, we're expecting the presented information should be clearly presented so that the users can be able to understand. And in case of added information, yes, you can add them under the note so that the person who is using them will be able to understand. But also the information provided should be relevant, which means they should be able to influence the economic decision of the users. And for the information to be relevant, it should have some characteristic, as I said, influence the economic users, but also the information should be given or should be provided on time. Because if you get the information out of time, then they should be of no use. And also the information should have a predictive and confirmatory value. They should be able to help the user to assess the present, the future, and the past, but also confirm something. If I see 5, then it should be have a meaning to me. And also the information should be reliable, which means they should be free from any material error, free from biasness, but also the information should not mislead. They should be presented faithfully, and also the transaction should reflect the underlying substance of the event. And also the information to be liable means it can be dependent upon by the users. The users will be able to depend on those information. As I said, also should be free from any biasness, from any material error. They should be complete, and also they should be prepared under condition of uncertain and degree of caution. And also we're expecting the financial statement to be compilable, which means the information given, they should be able to be compilable. And the compilability can be made within the entity, which is means you can do it from one item to another, but also from one period to another. And also they should be comparable in terms of the industry, which is external comparison, comparing with other entities which are in the same industry. Note, for the information to be comparable, they should be consistent. In case you've chosen a certain policy, then it should be adopted at a certain period of time so that you can allow the comparability. As I said, we have different users, as you can see, so you go through them and know their interests as I explained. And also for the financial statement to be prepared, at least we have some basic concept. We have different concepts, but we are going to talk about only few concepts, and one of them is business entity concept, which means the business and the owners are being treated separately, two separate independent entity, and that's why you can sue the company different from the owner. So this is what we call business entity concept. And we have a monetary measurement. As we said, all the transactions should be in monetary form so that they can be recorded in the financial statement, depending on the currency of that particular country. And another one is what we call a going concern. When we are preparing the financial statement, we assume that the business will continue to carry out its own activity for indefinite period of time, which means we have to prepare on the accrual base. In case the company is not on going concern, then we prepare on cash base, which we anticipate that maybe the company will be liquidated. So it has to be prepared on the cash base. So this has to be taken into account, but also the accounting period, that all the transactions recorded in the books of the account, these transactions are being recorded in a specific period. That's why you can see when we're preparing the balance sheet, or statement of comprehensive income or cash flow. All of them, they have to state the period. So each company should have an accounting period. And then we have what we call a dual aspect. We talked about accounting equation, which is asset is equal to liability plus capital. This means every transaction has two effects. It has a giving effect and also it has a receiving effect. So two accounts are being affected. One account will be receiving, another account will be giving. So this is what we call a dual aspect. And we have what we call accrual. We recognize the revenue even if we have not received, and we recognize the expenses even if we have not paid out the cash. That is what we call accrual. And matching concept means the revenue has to be matched with the expenses incurred to earn that particular revenue in that same accounting period. So these are the basic concepts that should be taken into account when we are preparing the financial statement. So basically that's an overview of the financial statement. I hope those who don't have the background of accounts, so at least you have ABCD, what is a financial statement, what are the characteristics of financial statements, but also what are the concepts when you're preparing the financial statement, etc. etc. Otherwise, I wish you a good time, and remember, there is no substance for hard work. Have a good time.